Hey, Steve Zanardo here with Remax Experts, Zanardo Associates. Happy Monday morning. Just a real quick update in the market. Current inventory right now, we're at 10,257 units with 916 selling. So if you notice that this is very redundant in the last 3 weeks, it's been over that 10,000 mark with the same amount of selling units. So basically what we're seeing, the market's still going quite well. Our listings are selling, where buyers are buying properties and our sellers are selling. We're seeing a little bit of slowdown on the higher price housing. A little bit now. We're starting to have less showing, so we'll see what that's. Usually, probably a price adjustment will correct that. So what we're seeing now is where's the market going? And currently, right now, like I always say, we're in an ebb and flow market where there's amount of inventory that's coming to the market is the amount of inventory that's going off the market. That's why we have like a stagnant number at 10,200 units, which is good. So that means that it's ebb and flow. So it means whatever's coming on is coming off. So there's good movement in the market. Everyone's sort of confused and with the market, nobody really knows what's happening. Some people I talk to, they're bullish. They're thinking the market's back into a swing. We bottomed out. Now we're going to get into this crazy infinity type of increase in value. It's hard to gauge, right, just by articles, because if you kind of look at it, there's some optimistic articles, and there's articles like this. UK home buyers increasingly stretch amid higher rates. So what I'm telling clients and friends right now is that we have not corrected the problem, and the problem is debt. So if the problem of debt is corrected, I would agree that the market's going to take back off. Because I was talking to my coach, he's thinking, is it a J, then we drop down further, or is it like just straight back up? So I'm in with him on the J version, so it's come down. We got a little bit of optimism, then it's going to come straight down again. Because regarding debt, so there's only a few ways to correct debt. It's either the Feds lower the interest rates back to where people borrowed their big mortgages on those old rates. The debt is paid off, the debt is sold off, or the debt is taken away from them, either by a bank sale or just repossession. So there's only a few ways to kind of correct that. And to be honest, none of that's been handled right now. Like, I know some people are limiting their debt, they're selling properties off, but there's not enough of that to actually fix the current issue. Because what's happening now, even with the current interest rates, I know people got optimistic with the hold of the current. I think we're at 4.5% overnight lending rate, but it's done enough damage, because if people are carrying lines of credits, variable mortgage still, hoping that it's going to go down, and locked into fixed rates, even with one of our investment properties, it becomes unaffordable, and then you're just chewing away at your equity, or you're at a pocket cash wise, and then there's a 0 point to this at some point. And also to be wary, I know if you're not watching the U.S. or just the world on a grand scale, like, we got a lot of issues here with banks, right? So there's another bank that just failed, Credit Suisse, over the weekend. This is Credit Suisse, a large bank. This was actually bought last night, Sunday night, by IBS, but for 3.25 billion. So there's another worry, right? So that's going to be the fourth bank in 2 weeks, and these are very large banks. So three in the United States, and then one now in Switzerland. So now, in order for this to go through, they got to clear up $17 billion of debt. So which held a lot of investors out. So I kind of like this term here, global financial crisis. So this is what we're currently at right now. Like, if banks are failing, like, what's next? So there's some sort of optimism that these banks are getting bailed out by other banks that are being bought, or there's going to be some federal intervention, not only just in America, but in Canada, in Europe. So everyone's trying to help out everybody, so there's not a global financial collapse. So we'll see what happens. But that's pretty much it, guys. Let's keep it going. We're obviously, if you are looking to sell your house, still very good time to do it. We obviously saw some incremental increase in value, which is great. If you got your houses appraised or evaluated, let's say in December, January, expect a different evaluation. Right now it's at a higher amount, which is good. So that's pretty much it. Have an amazing day, guys. Ciao.